And good morning. Welcome into the show. Okay. Phew. Where do we even start after yesterday's big, you know what? Everything really pooped the bed yesterday, which is incredible to me. Want to know why? Pretty simple reason why. So what happened on what happened on Wednesday? We saw that the markets came and reacted that the Fed was not going to raise interest rates by 75 bips. That's what Jerome Powell said. Instead, they were going to do multiple bumps of, God bless it, multiple bumps of half point bips raises over the next year to get target inflation to 2.5%. As of Wednesday, that was really good news. As of Thursday, that was really bad news. And what changed overnight? Nothing. This is why things are not baked in. They told you for multiple months and weeks that you were going to have the half-point inflation bump baked into the market already. And you saw a 3% rally on Thursday and nearly a 5%, it dropped 6% at some point, but it closed about 5% down on the NASDAQ yesterday. So explain to me how flip-flopping basically 9% within two market sessions is baked in. So when I say that things are not baked in, guys, they're not baked in. These people, they couldn't bake anything if they tried to. They're baked in the head on marijuana. That's what they're baked on. This is absurd. There's no baking in. I'm sorry. It just doesn't work that way. I want to pull up my notes here, but I want to make sure that you guys can't see my other notes. Okay, let's see here. Where is it? All right, well, it's not going to load right now, but I'm just going to read it to you. Guys, listen to this. So I went through this morning as part of my important daily show prep, and I pulled out big name losses from their intraday highs in the last 52 weeks. All right. I went through the FANGs. I added Microsoft, Netflix, Nvidia, AMD. Y'all ready for this? Facebook, down 46%. Apple, down 15%. Amazon, down 39%. Amazon, down 39%. Netflix, down 73%. Google, down 14%. Microsoft, down 12%. Nike, down 35%. Nvidia, down 47%. AMD, down 43%. So everybody, not you guys mostly, but everybody that's saying these stocks can't fall, stocks only go up, this and that, I'm sorry, they don't. And I'll read that one more time. I will read that one more time before the show's over to people that tune in a little bit later. So what are markets doing today? They were almost positive just 15 minutes ago. I guess we're going to start the day negative, and we'll see where we go from there. So let's see this is just kind of some general thing. U.S. stock futures fell Friday morning to extend losses from the prior session as concerns over the Federal Reserve's ability to bring down inflation while maintaining solid economic activity resurged. Where was that concern on Wednesday after Jerome Powell spoke? And they had all that time to know what was going to happen and digest everything that was coming through. The NASDAQ dropped 5%, nearly 5%. It dropped 4.9%, but at some point it was down over 6% yesterday. Wednesday, I think the markets had a sense of relief that maybe Powell took a 75 basis point, this is really awesome, a 75 basis point bump off the table for further hikes, suggesting that the Fed might take a more mild path. But Thursday, I think markets recognizing that there are risks associated with that higher inflation, maybe. Cool. If you look all the way back to August of 2020, there's been one major theme in markets, and that is short duration stocks, meaning low price to cash flow, has been outperforming longer duration stocks. Or high price to cash flow. God, it's amazing how it always comes back to this. Everybody is the stupid one for looking at stocks with low price to free cash flow until you know what hits the bed and everything's back to value. Okay, sure. The ongoing move higher in treasury yields and borrowing costs is weighed on growth and technology stocks, which are valued heavily on their future earnings potential. Who is this? Paul Kim, Simplify Asset Management. The bottom line is there's too much demand for goods and services and not enough supply, and the Fed can't solve those real world problems. And I think that's what's solving the indigestion. Weird word. I do not think that we've hit a bottom yet, simply because we've started the hiking process. This is going to be a long time coming. Where is the other one? Here. Some economist. I've heard this guy's name before. I've heard the second guy's name. Brunello Rosa, but I've really heard Nouriel Roubini. Believes there's much more monetary tightening coming from central banks and that more bad news is on the way for the economy. I'm going to get into the jobs number stuff here in a few minutes. I have an opinion on it. No brand new opinion that you've never heard me say, but it's just so basic when you think about these things. It's hard for stocks to be totally optimistic when inflation is going up, growth is going down, interest rates are rising, and are rising across the globe. Give way where we already saw that. We already talked about this. Kevin O'Leary sitting in a park. That's weird. Maybe he can't afford anything anymore. Okay. In the Eurozone, don't even get me started on Europe. In the Eurozone and in the US, they're nowhere near realizing that actually there will be some form of contraction in economic activity. Yeah, it's going to be bad. It's going to be real bad. Jobs growth. This one doesn't make sense to me. I guess the jobs number is coming out today. What time is it? It should have came out at 8:30, right? Let's see. Here we go. What does this say? April the unemployment rate is 3.6 versus an expected 3.5. So this unemployment rate doesn't make any sense, because when you start talking about unemployment rate, 3.6%, you can't even drive down the street and see a thing that says we're hiring. It's just absolutely ridiculous. So why don't we just type in U6. What is this? Why do they advertise to me? I already spend tons of money on your website. Why are you still advertising to me? Okay, U6. So the U6 last value is 6.9%. So this is the underemployment rate. So this is the rate. So the unemployment rate only counts people that are actively looking for jobs. Let's say that you were looking for a job and you are no longer looking. You're no longer actively looking in the workforce. You are not counted in the unemployment rate. You are not counted in those jobs numbers that come out every Thursday. The underemployment rate is what you want to look at. A long-term average of 10.37%. Let's see. The U6 underemployment rate is 6.9% compared to the 7.2 last month and 10.7% last year. So double it. And double it. So there you go. So I don't believe those numbers. But anyway, I digress. Let's get back to this. Economists say the number of new hires could start to slow from here. A slowdown might be welcomed. So we want people to work less, in light of fears that the labor market has become too hot and that, nobody has a job. You see signs everywhere. Nobody's looking for work. Exactly. Nobody's looking for work. Oh my God. Sometimes I'm rendered speechless. It's rare, but it's happening right now. A slowdown might be welcomed. Who wrote this article? Camille Krasinski. This person should be fired and deported. I don't even want to read the rest of this story. It's aggravating. Bitcoin drops nearly 10% as 126 billion is wiped off. So Bitcoin, the ultimate hedge against inflation and chaos, is moving with tech. So that doesn't help. Bitcoin was down 9.6% to 35,743 on Friday morning. Other cryptocurrencies followed. Bitcoin has remained correlated with equity markets and rising and falling with them. It's just bad. Bitcoin lost a key level below 37,500, and that could indicate a lower move. Yikes. And then this is really good. Remember, Bitcoin wasn't going to be regulated, and it's great because it's not regulated. Okay. The state of New York wants to ban new Bitcoin mining operations, a move that some industry insiders feel could have a domino effect across the United States. The bill, which is swiftly making its way through the state capitol in Albany, calls for a 2-year moratorium on certain cryptocurrency mining operations that use proof of work authentication. Okay, yada yada. Lawmakers, listen to this. Lawmakers sponsoring legislation say they are looking to curb the state's carbon footprint by cracking down on mines that use electricity from power plants to burn fossil fuels. New York will be left behind, losing to other states at best and at worst other more progressive nations. New York is setting a bad precedent that other states could follow. If the bill passes, it would make New York the first state in the country to ban blockchain infrastructure. I'll tell you what, since the beginning of coronavirus, you want to talk about a state / city, namely New York City, that has just absolutely destroyed themselves from within. I mean, I don't know if it's gotten any worse than New York out there. The yields are ticking up. Look at that 30-year, 3.2%. Everybody's asking me about these I bonds. You have the 5-year over 3% now. These numbers are just going to keep going higher, guys. They're just going to keep going higher. What reports today? Ocugen reported before the bet. Speaking of Ocugen, I really want to pull that up. So, if anybody watched the live stream yesterday in the afternoon, I specifically remember a video that I made standing in the studio, and I said that Ocugen is a joke. They do not have a pipeline. Their COVID nonsense is nonsense, just that. And that the stock is going to completely fall apart and the company is totally worthless. Well, that was back in here. That was back somewhere in here. I think we probably did it on one of these 2 days. April or, yeah, it was probably April. It was probably back in here. And the comments tore me apart. They actually hurt my feelings. JK, you can't hurt my feelings. But man, $2 a share now. $2 a share from $16 a share, $17 a share, $19 a share. Holy moly. Well, they reported today, so get your oven mitts ready for that. Under Armour is getting smoked this morning. They were down like 8% yesterday, down nearly 18% this morning. They missed every mark there is. So if you're trying to trade Under Armour, maybe look to go long on that today from a day trading perspective, because that rally up could help you. And it could also go down a little bit more, so pay attention to that. DraftKings reported this morning before the bell. All right, that's it. So that's it. All right, let's see. Let me go here. I'm going to read some of your comments. I see them fluttering in. Oh, speaking of which, hold on. Did my notes come up yet? Did my notes populate? What is going on here? Why are my notes not populating? Oh, duh. Wait. Didn't I? Big name. There it is. Okay, here we go. I named it something different. Can I blow this up? Can I move this in? Okay, well, you're gonna have to look at it from here. Here's the things. Facebook, 46%. Facebook, minus 46%. These are big name losses from intraday highs. These are saying companies that, guys, I'm going to read off the FANGs, Microsoft, Netflix, NVIDIA, and AMD. And we know what I love about this? I love that this has been so quiet. Did anybody know? Everybody knew that Facebook was down 46%, Apple 15%, Amazon. Did anybody know that Amazon was down 39% from its highs? No. Netflix down 73%, Google down 14%, Microsoft down 12%, Nike. Did anybody know that Nike was down 35%? NVIDIA. This was supposed to be the greatest thing since sliced bread. Do you remember when NVIDIA went for that absolutely incredible run in the beginning of the winter? Down 47% from its highs. AMD down 43% from its highs. Come on. Get real here. Stocks don't only go up. I'm sorry. I just don't know what else to tell you. All right, let me read some of your comments here. You do have record numbers of boomers retiring as well, which gets lumped into that. Yeah, you're right, when we're talking about the unemployment stuff. Okay, Starbucks, a few towns over, closed permanently because they couldn't staff it. There's 2 Starbucks over by a doctor's office that I go to. I went to both of them in the same day, and both of them were closed. And they're probably, 3 miles apart from each other, 4 miles apart, because there was no staff. The McDonald's that is right up the road, they started closing at 8 p.m. because there's no one to work. So you're telling me that the economy is just flossing as far as jobs go? Come on, give me a break. Everybody sees it. They're trying to pull the wool over our eyes. I guess based on info, Baba will be delisting it. Oh, here we go with the freaking delisting talk. New York should figure out how to convert ventilators into crypto miners. Too soon. Chocolate is the future of commodities. Yeah, maybe. California or San Francisco, is it worse? Is it worse than New York? There's an issue with wages for many companies. They are paying current employees. It's causing many people to look for jobs elsewhere and turn to online businesses. Yeah, you're right. New York is a dumpster fire, homeless everywhere, crime everywhere, garbage on the streets. My wife doesn't feel safe when she goes to work. Listen, I think that I've been to New York a couple of times. I lived in Jersey. I lived in Summit, New Jersey for some time. New York is filthy. That place is disgusting. I hate going to New York. It's dirty people, dirty streets, just dirty everything. Ew, God, New York sucks. God, even that freaking train to get in New York is disgusting. The bridges are disgusting. I've never seen more gum and filth everywhere. It's just absolutely disgusting. Mo, when trading long, do we look at day trades? No. So if you're trading long, you want to be looking at the long-term chart. I'll pull that up here in a little bit and I'll go through it. By the way, guys, those of you asking these questions, these are really good questions. So tomorrow, I am going to be doing you see in some of the when I talk about the Bid and Ask Nation, I go in and I say, we have these Saturday exclusive seminars. So tomorrow is going to be one. I'm going to be here, same place, 9 a.m. Eastern time, an open Q&A session for the Bid and Ask Nation. They're usually 60 to 90 minutes, and I just teach something. Tomorrow I'm going to be teaching swing trading. So we're going to be looking in depth on swing trading, both going long and short, because you need to know how to short in this market. So if you don't know how to short, come and join. If you join today, you join tomorrow morning before 9 a.m., you're going to get access. If you can't attend, it's recorded, of course. So go ahead and jump into the Bid and Ask, and we'll go over swing trading. Okay, Mo's notes were baked in before the show. True. So what about Nautilus, under $2 per share? You know, I've reached out to Gary, and I basically gave him my thesis. Paul gave him his thesis, and Gary said that he wants to wait for after earnings, which are... see, NLS, isn't it like next week or something? Their earnings report comes out on May 23rd. So after the 23rd, we'll decide from there. Yeah, I was called an idiot for not buying NVIDIA at 300. Yeah. Is Google going down quite a bit more than that? Yes, it is. Can you short a leveraged fund like SQQQ? No, but you could buy an inverse. Don't be sorry, Mo. It's the truth. I don't know what I apologize for. Where else do we have? California is hell. After those figures, I figured, I'm so glad I discovered everything money early in my trading. Yeah, for sure. 45.81% on Facebook, Mo, is fake news. Okay. We can argue about semantics if you want. You lived in New Jersey. Do you know Pauly D? I wish I knew Pauly D. He's so funny. New York is a dumpster fire. New York is a dumpster fire. Oh my God. Look at all these comments. Mo, do you ever use line patterns, wedges, triangles? No, I don't. I don't see any use in them. I do not think that they bring any value to make my trading any better of using them. So no, I don't use them. Where else do we have? I live in New York City. Sorry, Randy. Yeah, okay. Mo, can you check on HDSN again? Sure. These country boys don't appreciate the Big Apple. Yikes. Gianni's a city slicker. All right, let's pull up some stocks, run through them. You guys tell me whatever you want to look at, and we will go from there. So this Nautilus one, yeah, I think I'm probably gonna, I don't know. I got to go and read some Seeking Alpha on this one. All right, Mo, Schwab or Fidelity for brokerage? That's like asking me, well, just go with Schwab. Do not go with Fidelity. Please check Tesla. I would be more than happy to look at Tesla. Tesla's going to open the day at $876 a share. This is a absolutely wicked, ugly face pattern that's developing right now. Holy moly. Absolutely. And also, look at this. You have a little head and shoulders in there too. You got a little head and shoulders. You got an ugly face pattern. Once this thing breaks this level of 850, see ya. Beautiful downtrend happening. It's already starting to swing to the other direction. Look at the volume in the past. Oh, what is this date? This is probably April, I don't know, April 30th, something like that. You have had 1, 2, 3, 4, 5, 6, 7, 8. 8 out of 1, 2, let's count them. 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 8 to 14. You have more selling volume on 14 out of the 22 days. That's really good if you're going short on this thing. It's just a lot of negative sentiment on the stock. I love it. I love it. All right. XLE, that's a good one. So XLE is the energy ETF of the spiders. So this is a tough one because you're let's see here. When does this go back to? 14. You know, I'm not saying that the run is over, but be careful up here because you're approaching these highs. You're trying to bust through them. I do think that there's probably a good possibility that you can get through them because energy is in the media right now. Energy is a major part of the inflation number that they're not talking about. So I do think that this can probably keep going higher. Pay attention to this one. Now, if they sign any bill or anything that could help the energy pricing, I guess, or help the people with energy pricing, you could get a little hit. So make sure you're taking profits on this thing as the climb happens. Did you ever do a video on taking profits? Yes, there is a video on taking profits. Actually, I think there's multiples, but we can cover that tomorrow in the bid and ask session. Guys, please write down your questions and have them ready to ask me tomorrow because there is absolutely zero chance that I'm going to remember to answer anybody's question. I can't remember them all. So just write them down and send them to me. Holy crap. Look at Kellogg. This has been an epic run on Kellogg. Let's pull up a line chart real quick. So, what, man, this was not pretty. This was not a pretty climb, but it has established these support levels at the 25-day moving average and a little bit above. This is a hard one for me. So I think I would probably just try to swing trade this. If you can break out to something like this, because you had a lot of wicks yesterday. That was a very big wick candle. So if you start getting these big wick candles that are being created, there's a video I just made that I'm going to put out on the trading channel. If you have not followed the trading channel, please follow it. Can somebody please post the trading channel in the chat right now? That would be wonderful. If you could just post the link. I did a video on candles, the different types of candles, and this was one of them, and it was big wicked candles. Say that one 10 times fast. When you get these days like this, it's just total uncertainty, especially when there's big volume. So people say, what's the difference between a candle like this and a doji, which looks like that? The difference is this one typically has a lot of volume surrounding it, and you went from a price of, say, 71 to 67. I'm just making this up. 71 to 67. This one, you went from a price of 65.50 to 65.30. So there's a lot more volatility that can come, and this is a lot more risky in subsequent days compared to a little doji that really doesn't do much for you. So you notice here, you have these dojis, and it just goes sideways. You have, where's a big wick candle? This is a pretty big wick candle over here. This is a big wick candle right here. You saw the following day, you really shot up and shot all the way down. I mean, that was probably $1 swing right there. So you notice you just get more volatility. Okay, next. No volume required. No, volume is always important. Volume is always important. What did the dot into candle? Okay, I don't know what that means. What else do we have here? Mo, tell me what face wash you use. I use SkinCeuticals. I use SkinCeutical. I don't know the name. I have a bunch of them. I have a bunch of them, and I have a hydrofacial machine over there. So it's not just face wash. I was always duped by people that were like, yeah, it's just your face wash. It's just your moisturizer. No, it's like having tons and tons of product that you use and it actually works. So SkinCeuticals. If Nicole's watching, she can type in the chat what it is because I have no idea what it is. It's one is white, one is green, one is clear, one smells like hot dog water. Yeah. All right. Next. What am I looking at here? Coca-Cola. So Coca-Cola, I'm actually surprised that Coca-Cola is not doing the same trend as Kellogg. I thought that they would run together, but here's the difference. Look at this. Look at these frickin' W formations that just ran up so beautifully with Coca-Cola. And here it is. So these W formations, it kind of stopped making W's right around here, right? And it kind of went up and it just kind of started going sideways. Now look at this. You see when this fall happened, it didn't drop below this level and this level because there was just so much support right there. And that is why W formations are so important. This is exactly why you need them. And let's compare it with Kellogg. So pay attention to this line chart right here, how we had these W's created. Now let's go here. What was it, K? You notice how you really don't have those W formations? So when you start this fall, when this starts to come down, this thing is going to come down. And it's going to come down to the 61 area because there's no support levels in there that were created. It's just as simple as that. What else do we have here? Mo, any headphone suggestions to get lost in the sauce of music? Well, I really like AirPods, and they're great for just your basic headphones. But if you're going to get any headphone, I promise you, I just try all these new noise canceling headphones. I've tried them all. There's a ton that I have too many headphones. It's just stupid. Sony MDR or MDX 1000s, the brand new ones, get them, worth the money. I think they're like $270 or maybe $230. You can get them on sale, or $300. They're absolutely fantastic. You're going to have them for years. Do not hesitate, especially if you travel on planes. Excellent headphones. All right. Costco. Costco's trend is superb. I am short on Costco right now, and I will be adding to this position today if I get an engulfing candlestick. Yes, it's Friday. No, I don't care. As long as I get an engulfing candlestick with a ton of red volume, I will be adding to this today. With that being said, look at this ugly face pattern that we have being created here. And if you want to really pull this thing out, this is what I would love to see. This is what I would love to see. You have a shoulder in here. You kind of had a shoulder in there. I would really like to see, this is another shoulder. If we could just, to be honest with you, if I can get a pullback one more day and create this side of the shoulder, goodbye Costco. Goodbye Costco. In the short term, of course. Great company, but in the short term, of course. All right, let's go to Kroger. I'm short Kroger as well. So, love the trend. Love the volume. Out of, I don't know, let's call that 15 days. You've had 3 days of buying volume. Absolutely fantastic. This just needs to break this 53.70 level where it's at. If this just breaks, you will have an awesome short here. Not only that, there is zero support here. This is a total flagpole. You have a gap to fill. This is going to be an excellent, excellent short. I will run this thing down to $49, whatever that number is. I'm super pumped for that short. Bob, to fill the gap soon? No, I highly doubt it. Sony headphones are amazing. Yes, they are. All right, what else we got? CCL, of course. We have not checked CCL in quite some time. All right, so CCL is... Actually, guys, this is a really great example of different patterns. So here you had an ugly face, and look what happened. Here you're getting an ugly face, and look what's happening. This is a stretch right here. This is a stretch to call this an ugly face because I would like to have seen this a little bit higher, but look what's happening. That's what happens when you get ugly face patterns developing for you. So that's 3 ugly faces that I just drew right there, and you see the dramatic fall right afterwards. So definitely important to pay attention to those ugly face patterns. If you don't know what those are, come and join me in the bid and ask. But let me see what the stock is all about. So, it's going to be hard for you to break through this $16.50 support level. It's going to be difficult for you. That's what I got to say about that one. All right, Disney. Just started Trading 101 yesterday. Excited for it. Awesome, man. If you have any questions, please feel free to tag me in the Bid and Ask chat at Trader Mo. I'm always happy to answer those questions. Holy moly. So this went from a high of $203 and it's now at $111. What in the world? I should have thrown Disney in there. 111. What was it? 203. Oh, wow. Was that 46%? 46% fall? Unreal. So Disney, it's come back to COVID levels. This thing, it's going to keep falling. It's going to keep falling. I do not know their financial situation, but they have so much selling volume in their against them. Man. So when do they report earnings? Next week? So they report next week. So we'll see what's going to happen next week. I would wait for that. Under Armour's down 20% pre-market. Yes, it is. Yes, it is. Okay. Oh, SQQQ. Let's see here. So, yeah, just keep following the trend. I mean, here's what you have with SQQQ. But remember, this is an indice, so you're going to have to roll against the Fed. You're going to have to roll against the jobs and all this crap that's in there. So be careful with this one. I like the trend that we're starting to see with it to the upside, but be careful. You have a lot of resistance here at this, I don't know, $49, $50 range. So be careful with that thing before you get jumping into it and going crazy. Donkey Kong's going for a crazy ride. Let's type that in, DKNG. What's the ride? Holy crap. DraftKings was at 70. When was this? So a year ago. A year ago, this thing was at $74, and today it's at let's call it $15. Let's give them the benefit of the doubt. 80% drop. 80% drop for a company that was supposed to be super disruptive and the next big thing. And you burnt. So, downtrend. I mean, here's the problem. Once you drop below this level of 13, you're going to move to this level of 11, 10, and then back to their IPO days. So keep following that one if you want to go short on it. There's no doubt. Aren't leveraged ETFs more for day trading? Yes, absolutely. I've said it now. I'll say it again. If you want to trade levered ETFs, 3-time levered ETFs, do not be in them overnight. You will get smoked. I promise you, you will get smoked. Look at LABU yesterday. I think it was up or down 20%. So just please, please, please be careful with doing those kind of stocks. All right. I will do Roku. And let's see here. Hold on a second. Give me 1 second. Okay, here we go. Roku. What was this fall? $492. So, wait, what? Oh my God. 100. 80% fall. Go buy the dip. JK. All right. So it's coming back to COVID levels. This was COVID right in here. So just follow the trend. Just keep following the trend. To be honest with you, I'd probably just rather you swing trade this and do it that way. I think you're going to make a lot more money than going long on this thing. You missed Roku. It's down 1,000,000%. I sure did miss Roku. I will never forget. The kid may be in here. A super nice kid. We've had multiple discussions about this. He was like, Mo, you don't understand Roku. And I'm just like, okay, I don't understand. And he was telling me, you're missing an opportunity up here at 500. Okay. You're missing an opportunity at 300. Okay. You're missing an opportunity at 250. Okay. Am I missing an opportunity at 99.05? Am I still missing this opportunity or what? At what point is this opportunity over? I mean, come on, get real here. All right. Let's see. Dylan, sorry I'm spamming. I don't really care. Is Roku a frowny face? Yeah, really. All right, guys. Bid and ask. What do you call it tomorrow? Seminar tomorrow, 9 a.m. Eastern time. Follow the trading channel. I will catch you on Flippity Flop.